Good morning, dear students. Today we are going to see the business of banking. In this topic, we are going to discuss about the introduction of banking, role of banks in the economy, how the banking system works, and other financial institutions. First of all, what is meant by banking? Banking is a business. Buying, selling is a marketing. In banking, we have to lend the money to the customers. There is a definition for banking. You know what is the definition? Okay. A bank is a business. Banks sells their services to earn money. Banks must earn a profit to survive. How the bank earn a profit? The person, the customer who give the interest for their lending money, that is called a profit to the banker. Now the definition: accepting for the purpose of lending and investment of deposits of money from the public, repayable on demand, order to otherwise, and withdrawable by check, draft, or otherwise. This is called a banking, meaning of banking. Okay, then a unique business. What is the unique business? The services bank offer to customers have to do almost entirely with handling money for other people. Um, Money is a medium of exchange, an agreed upon system for measuring volumes of goods and services. Money shows how much something is worth. So, each and every business, the objective of the business is to earn profit. Is it right? Yeah. A bank is a financial intermediary for this safeguarding, transferring, exchanging, or lending of money. An intermediary is a facilitate acting between parties. Bank facilitate the flow of money throughout our economy. Then various types of banks are available in our system, like commercial banks, central banks, cooperative banks. So various kinds of banks are available. Each and every kinds of banks are rendering their service depends upon the customer's need. Okay, then banking today, how the banking institution is run, we have to know. Traditionally, banking was viewed as a solid and a slow moving industry. We can use the paper, pen for the each and every kind of work. But nowadays, we can use this each and every in an electronic system. Banking today is an existing, fast moving around the clock, around the world activity. After that, mergers. What is mean by mergers? Mergers means join together. If in banking system, what is merging means two banks are joining together. A merger occurs when one or more banks join or acquire another bank or banks. Mergers increase the size of banks, giving them more resources. Mergers decrease the number of banks. Mergers have created an opening for a new wave of small local banks. If the banks merges means they will service, they will give lot of services to the customers. Then technology. Technology is a new concept, maybe 10 to 15 years back in banking industries. A lot of technology we can use. Impact on bankers. How the technology impact in our banking system, right? Accounting services, auditing, and um, examining functions have been taken over by fast and efficient technology. Within a second, we can get each and every information from the banker. Then funds transfer, record keeping, and financial analysis have become instances. Then impact of customers. Automated teller machine. Now we can use the debit cards or ATM cards. That is called automated teller machine. Smart cards, online banking, each and everything we can use in the technology. Then competition. As government regulations have changed, competition between the banks has become fiercer. Banks compete with each other and with other businesses, then sell financial services. And the role of banks in the economic system. What is the role of banking in the economic system? Money is a medium of exchange and the basis of the modern economy. Banks and their institutions play a vital role in performing services that are essential to the functioning of an economy. Then keeping your money safe. How to keeping our money safe? We have to keep a record keeping, proper record keeping, identification, enforcement, transfer the security, sound business practices. By this way we can keep our money safely. Then transferring, how to transfer the money between the customers and between the banks, between banks and individual customers, between banks and industries, between banks and governments, between the governments. By this way we can transferring the money. Then lending, how we can lend the money from the bank, loans to the businesses, loans to the governments, loans to the individuals like credit cards, home loans, automatic automobile loans, like that. Then money at work. Banks earn money in various ways. Most of their income comes from the interest that people or businesses pay as the repay of loan. When banks lend money, they put it to the work. Then assets and liabilities. We know what is meant by asset and what is meant by liabilities. Already we know in our account system. An asset is anything of value in financial terms that usually meant money. A liquid asset is anything that can readily to exchange like a cash. That is called a in financial services we can call as a money market, like that. A liability in financial terms in a cash obligation. Two principles of banking. What are the main principles in banking? Means a bank's liabilities exceeds its resources. A bank's liabilities are more liquid than its assets. Then what are the changes in traditional services? Their branch locations, extended hours, drive up windows, variety of checking accounts, savings options, and personal services. Then now we can introduce the new services. What are the new services? We know credit cards, innovative lending, automated teller machines, smart cards, and online bankings. These are all the overview of technologies in bankings. Thank you.